Hey folks, welcome to a product review at Phenomenal. Today we're going to review George & Cox's 110 billion stock fund, which trades on ticker DODGX. Now, the fund has a very long track record. It has a concentrated portfolio of less than 100 stocks, where stocks are selected primarily on value. And as mentioned, it manages an astonishing $110 billion. Now, let's find out what makes this fund so successful. And we're going to kick off with a benchmarking exercise. If you look at the fact sheet or the website of DODGX, you will see the Russell 1000 BLNDX as well as S&P 500 as the benchmarks. And our Alpha Analyzer tool also suggests the Russell 1000 Value Index based on a relatively low tracking error and a high correlation. Now, if you look at the performance of DODGX compared to the Russell 1000 Value Index or the S&P 500, it has outperformed both quite handsomely since 2001. Having said that, if we zoom in into the exit returns compared to the Russell 1000 Value Index, we do see that most of the outperformance was in the time between 2001 and let's say 2004. Then in kind of like the 10 years thereafter, there was no outperformance whatsoever. But since 2016, we can again see that the fund has started to outperform compared to the Russell 1000 index. So let's actually select that index and run a factor exposure analysis so that we can find out what are the key drivers of this fund. Now, if you look at the equity factor exposures, we do see that well, during the GFC, the volatility of factors was higher, and so were the betas. But that compared to the Russell 1000 Value Index, the average stocks in DODGX was actually not cheaper. It is as cheap as the average stock on index. But, and therefore, there is no consistently positive exposure to the value factor. Now, what we do see that the exposure to the low volatility factor was consistently negative, and we can kind of eyeball that the exposure to the quality factor was consistently positive. So simply said, DODGX selects stocks that are cheap and that are a little bit more volatile than the average stock in the Russell 1000 Value Index, but also higher quality. Let's move on to alpha generation. We do see that DODGX has a high active share of 84%. We do see that it outperformed the Russell 1000 Value Index in 17 out of 25 years, which is great. And actually it was alpha generation in 12 out of 21 years. But we also see that the alpha generation in the early years was not particularly consistent. So we see kind of like the yellow columns being positive, negative, 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 positive, positive, and so on, but it has become more positive over time. And if you look at the cumulative return contribution, that mirrors exactly that evolution, that in the early years there was alpha generation and then alpha became negative. But since 2016 onwards, alpha generation picked up again. And we can see that the cumulative alpha continues to grow. Now, that's DODGX on a standalone basis. Now, let's have a look in terms of how it compares to its peers. Now, we have selected the Russell 1000 Value Index as a benchmark because you can invest into the index itself. And 3 products, one from Invesco, one from WisdomTree, one from First Trust. And these are all large cap or mid and large cap value funds focused on US stocks. Now, from performance perspective, we can see that since 2008, DODGX kind of performed, well, actually kind of underperformed most of those products until, well, post-COVID, and only recently has started outperforming or performing in line with its peers. Now, it is worth mentioning that these other funds have slightly more diversified portfolios. There is an index itself, which has 850 constituents. The product from Invesco, more than 1,000. WisdomTree 163 and First Trust 190, compared to DODGX with 81 constituents. Now, that also explains that with a less diversified portfolio, why DODGX had the largest drawdown with negative 63%, which was during the global financial crisis in 08-09, while the drawdown of the other products was slightly lower, probably because, as mentioned, they were more diversified. From a Sharpe perspective, we can see that the Sharpe is kind of like in the middle of the range. The kind of best product is the one from Invesco, the FTSE RAFI 1000 index. And if you look at that from a chart perspective, we do see that its benchmark index has the least amount of volatility, probably because it's one of the more diversified buckets. Same for the product from RAFI. And we can see the DODGX is kind of like in the middle of the pack from a return and risk perspective. Now, what's kind of interesting if we look at the styles of those funds, and again, we're going to select the Russell 1000 Value Index as the appropriate benchmark. We do see that on most metrics, all of those dots are kind of like similar, which means that DODGX has similar style exposures from a growth perspective, momentum and volatility and quality perspective. The most significant difference is actually with regards to market capitalization. So we do see that all these products are kind of like similar from a valuation perspective, but DODGX has the largest exposure to large caps. And that's kind of interesting because I don't think that's structural, because when we looked at the effect exposure analysis that was returns based earlier, we did not see a negative exposure to the size factor that was consistent. So this might be only the current portfolio, but be aware, right, compared to these other products, right, it has an overweight to large caps. And so this kind of like summarizes our product review of DODGX stock fund. As mentioned, it's a very large product with $110 billion of asset management, and that of course makes it very difficult to generate alpha, which the fund has done compared to the index, but not necessarily compared to its peers. And it's, from a cost perspective, it certainly is not the most cheapest product, and so it's the way to think about it probably that it does provide what you expect it to do so. I provide exposure to cheap stocks, but instead of just doing that, which is the same thing as the index, i.e. the Russell 1000 Value Index, it also adds quality, and that of course enhances its profile. And compared to the index, it's probably the better choice, but not necessarily compared to other products that do the same thing. Hope that helps. Have a nice day.